You go back and you look at a chart of gold, and you can see to the day, it was October of 2023, I think, when gold lifted off and came out of the range of the, 1700 to 2200 or thereabouts. But the following day, after that was announced that those reserves or those treasuries had been sequestered, gold all of a sudden kicked into, it started looking like a tractor in first gear, going higher. And that is a function of trust.
Is there still? Go ahead.
Foreign central banks just looked at that and said, hey, wait a minute, if they can do that to Russia, they can do that to us. We'd rather hold something that we actually hold, we know cannot go bankrupt, we know cannot be diluted. It's God's money. I mean, we've been inundated with all sorts of news, and I think that's only going to continue, and even the volume on that's going to be turned up. I'm watching 4.5% on the 10-year bond, and the reason being, the Federal Reserve a year ago cut rates twice, and market rates went higher. They went higher by 1 full percentage point. So here we are, you got Trump jumping up and down, berating Powell, although I think, $3 billion for 3 buildings is pretty stupid. But berating Powell because he won't cut rates. And I'm not sure that Trump understands that if the Fed does cut rates and all of a sudden we see a 5 handle on the 10-year, that is clear that the Federal Reserve will have lost control of the yield curve. And at some point in time, that's going to happen because there is no premium, there's no risk premium on treasuries. And when I say risk premium, I'm talking about whether or not A, you're going to be paid back, and B, whether you're going to be paid back in like a real currency or in monkey money.
President Donald Trump has been vocal in criticizing the Fed for not cutting rates further. However, if the Federal Reserve were to comply and we saw a significant rise in the 10-year yield, it would signal a complete breakdown in the bond market. A failure to control interest rates could mark the point where the U.S. loses control of its monetary system. This scenario would likely lead to massive inflation and further instability in the financial markets, a scenario that no one wants to see unfold.
And mathematically, that's where this goes, is that the treasuries are going to be paid back in monkey money. In other words, they're going to have to destroy the dollar to actually make the payment, because they can't do it in real terms.
Yeah.
In today's dollar, in other words.
And it's politically less expedient on their end too. So here's what you were alluding to here, Bill. So the top chart is the 10-year treasury yield. The bottom chart is the Fed funds rate. And if you look at both charts, I mean, they cut rates. This was back in August of last year. You see it going from all the way up here down to 4.25. But
Right.
the 10-year yield up above was pretty much unfazed.
Well, actually, from the day that they cut rates to where we are today, we're up almost a full percentage point. If you look at the tail on that chart, that green line, that's where they cut rates. So we're actually not substantially higher, but we are higher. Rates, market rates did not come down.
And what's interesting is that if you look at when we stopped cutting rates, which was back here in January, we actually were on an upswing higher on the 10-year, right? So you go from here to there, and then when they stopped cutting rates is when it started moving sideways.
Right. Yeah, that's my point. I'm not sure. I mean, we'll see what happens, but I suspect that if they cut rates again, look, to begin with, you've already got foreigners dumping treasuries. There was a pretty good article done by, it wasn't Vince Lancy, I forget who did it, 2 or 3 days ago, talking about gold is replacing treasuries on the balance sheets and in the minds of central banks, foreign central banks. In other words, they're opting to take either they're selling treasuries and buying gold, or instead of buying treasuries, they're buying gold. So gold is becoming a bigger and bigger, more important part of central bank balance sheets. And the reason being, it cannot be diluted, it can't default. And we know that that's not the case with treasuries.
What happens when more foreigners dump the U.S. debt? Have they been dumping in significant numbers? I mean, but the vast majority of the debt is still owned by foreigners, isn't it?
Just look. I mean, look at Japan has not bought anything in the last few years, and if you look at China's holdings are back to where they were 10 or 11 years ago.
Foreign central banks are increasingly dumping U.S. treasuries in favor of gold. In the past, gold was viewed as a relic, but it is now seen as a safe haven asset that cannot be diluted or defaulted upon. Countries like China and Japan have significantly reduced their holdings of U.S. debt, with Japan not purchasing treasuries for years. As more central banks move toward gold, the demand for treasuries continues to shrink. This shift is a sign that confidence in the U.S. financial system is waning.
The treasuries come back, but they don't even have to dump treasuries. I mean, all they have to do is not buy them. And then who leaves? Then who's the last, the buyer of last resort? It's the Federal Reserve, which is not even any longer a separate entity from the Treasury. That's within it's under the Treasury's roof, because they were merged, 4 or 5 years ago. Commodities for so long now, since the 70s, 80s, have been controlled by paper contracts. Mm-hmm. And what's happened is they've over-shorted contracts throughout the entire commodity spectrum. And that's fine, except for taking into account the real world, real supply and real demand. So what they've done is they've priced or underpriced commodities for so long that now you've got you have structural issues. I mean, take silver. Silver's in a structural deficit of 400, 500 million ounces per year. And if you could make the case that there's 200, 300 paper ounces for every 1 real ounce that exists. That's how bad it's gotten.
Silver is in a unique position. The metal is facing a significant structural deficit, with demand vastly outstripping supply. In fact, the market could be underestimating the real amount of silver available. There are reports suggesting that paper silver contracts far exceed the physical metal, with 200 to 300 paper ounces for every real ounce. As industries continue to demand silver for industrial and technological uses, the price could rise sharply. With a market cap of only $30 billion, any significant demand spike could have outsized effects on silver's value.
Utility is not the right word, because think about all the uses for silver. I mean, you've got medicinal, industrial, technological. I mean, every time they launch a Tomahawk missile, that's a monster box flying through the air. The thing with silver is that there's end use for it. I mean, when gold gets bought, gold is money. Gold gets, like Warren Buffett says, it gets bought and then it gets put in the dark and you never see it again. The thing with silver is it gets used. It gets used, and you can get some of it back, but it's only some of it or a small part of it.
Yeah.
So the structural deficit, and getting back to the importance of silver, I've said all along, and I still maintain, that silver is the fuse, if you will, to gold's financial bomb. Because when gold blows, when gold goes into failure to deliver, then you've got pretty much confidence across the world is going to collapse. Because, I mean, think about it. What's the value of a contract that cannot perform? The value is zero. So silver is such a small market. I think at current prices, you're looking at maybe 30 billion total production worldwide for a year. It's just such a small market in relation to gold. And you can't have silver exploding. You couldn't have $200 silver, in the short term. You couldn't have $200 silver and $3,500 gold. I mean, the ratio would completely collapse, and that would lead to a failure to deliver. If silver goes failure to deliver, I guarantee you within 72 hours, so will gold. And when gold goes failure to deliver, the financial system as we know it is done.
Unlike gold, which is often held in reserve and rarely touched, silver is constantly in use. Whether in technology, medicine, or defense, silver is an essential commodity with limited supply. As the market continues to tighten, silver's role in the global financial system will become more critical. If silver enters a failure to deliver scenario, when contracts can no longer be met, the impact will be immediate and catastrophic. A breakdown in silver could trigger a collapse in gold markets as well, leading to a full-scale financial crisis.
The deliveries were made. It was said back then that it was because of the tariffs. I don't really. I think gold was being onshored or brought back. Another thing that's going on that almost no one's talking about is that you have foreign central banks that are demanding gold back from the Fed. And if you remember 10 years, 12 years ago, Germany requested, 320 tons or something like that. And it took them over 3 years to do it. And at the time, they were saying that, it's too much weight. It can't be done. The logistics just can't be done. Well, we just saw that it can be done. And 320 tons, you could do it with 4 plane loads with Boeing 747 cargo planes. They can carry 95 tons each.
What if the U.S. government can't deliver the requested gold back?
That completely breaks all trust in the United States. Would you ever do business again if you were a foreigner? Would you ever do business again with the United States? And they've already come pretty close to that by sequestering Russia's $300 billion in Forex reserves in Treasuries. And now they're taking the interest from that $300 billion, and they've been giving it to Ukraine to fight Russia. I mean, so basically Ukraine's fighting Russia with Russian monies. Yeah, the dollar would get smoked on that. I mean, there's no question about it. If you go back to, just to get back to what I was just talking about, the Russian reserves.
With foreign central banks demanding their gold reserves back from the Federal Reserve and the U.S. dollar losing its grip on global finance, we are heading toward an inevitable reset. While a central bank digital currency, CBDC, might be introduced as part of the transition, it is unlikely to provide long-term stability. A gold-backed currency system may emerge, but it will take several resets before the global financial system returns to some form of stability. The ultimate reset could be a return to the real value of commodities, particularly gold and silver, as trust in fiat currencies continues to erode.
You go back and you look at a chart of gold, and you can see to the day, it was October of 2023, I think, when gold lifted off and came out of the range of the, 1,700 to 2,200 or thereabouts. But the following day after that was announced that those reserves or those treasuries had been sequestered, gold all of a sudden kicked into, it started looking like a tractor in first gear going higher. And that is a function of trust.
Is there still? Go ahead.
Foreign central banks just looked at that and said, hey, wait a minute, if they can do that to Russia, they can do that to us. We'd rather hold something that we actually hold, we know cannot go bankrupt, we know cannot be diluted. It's God's money. Ultimately, or when all is said and done, I think that's the correct view. But I think we're going to go through at least one, maybe 2 resets before we get to the final reset, the Mother Nature reset. The first reset, I mean, there's no doubt in my mind that they're going to try to do some type of central bank digital currency or whatever, stable coin. it's still going to be fiat. And I don't think that that's going to last much more than, I don't know, maybe 6 months. Could be less than that. Could be a little longer than that. But I think we're going to go through a reset, and they will mark the price of gold up on that reset. But we're still going to have a fiat currency. And whatever the end result, as far as what the world reserve currency is going to be, it will be tethered somehow, ratio backed or whatever, to gold. There's no way that the world is going to accept the situation we're in now again.